we've got Rajesh Bhatia. He's the Group CFO at Uflex, joining in to talk a little bit about the company's business outlook, the inflation woes, as well as demand trends for flexible packaging. Thank you so much for taking time out. To begin with, what are the current trends that you're seeing when it comes to BOP and BOPPET prices? Have they cooled off, and will the company be looking then to undertake further price hikes?
This quarter, yes, we're seeing some softening of the prices on the both BOPP and the PAT. But these kind of one-off things were there in the earlier years also. There are soft quarters this particular quarter. But overall the demand aspect is looking good, and the price corrections have also been accelerated by the fall in the raw material prices as well, both for the polymers as well as for the PET. And that's behaving in the direction of crude, the way we've seen from February highs to now this has come down quite a bit. Yes, there's been a bit softening, but that's all part of the game, and on an overall year basis, you'll be still fine with the demand aspects and the margins also.
I wanted to understand was if you could spell out the current capacity utilization levels, as well as the capex plans that you have put in place for the next 3 to 4 years, and more importantly, how is it that you're going to be funding them?
So capacity utilization, the three key segments, the film, the packaging films, so that remains for the overall packaging films group at close to about 100%, almost at 100%. There are plants which are doing 115, 120%, and there are plants which are doing about 70%, like in Nigeria. But still, on an overall basis, we are at 100%. Aseptic packaging, as I told earlier, also this quarter we achieved 91%, even considering the enhanced capacity which came into being in the first quarter. The flexible packaging side is the one where we've seen still the consolidation phase going on, and there we are seeing about 73% or so the capacity utilization levels. But again, while 73 to 90 is not a big jump that is coming your way, but that market remains affected by absolutely low margins if you see the other competitors in that field also. So the margin play is not good. So we have also intentionally sort of reduced some of the quantities where the margins were not very good. So that's one segment which over the years has not grown, and that's where we've not added any capacity or any capex plans there. The capex plans currently what are in pipeline are Dharwad in Karnataka, where we're setting up a CPP as well as a PET facility. Dubai, where we are setting up a CPP facility. And recently we announced backward integration in terms of making our PET resin at Panipat, which apart from these three, there are no other major capex plans, and these are all already financially closed, tied up through a mix of debt as well as equity.
Since you're talking about the flexible packaging segment, seeing that consolidation phase, the question is, when will things improve here? When will your overall capacity addition pick up? What's the timeline, and what is the strategy that you'll use in order to improve the dynamics here?
I think we've really felt that this consolidation should have been over by now, but it's taking much longer than we had anticipated. And we've seen that distress all around, especially in the last 2 years when the packaging film prices went through the roof. The small guys who do not have any protection or do not have any backward integration in terms of their packaging films availability as well as the pricing, did see a lot of pain. and at what time that pain culminates into the capacity going off the table and not coming back. I think we should give ourselves another 2 years to see that happen. The demand is growing at about in India. When I say demand reflection in terms of the packaging films, which effectively goes into then the flexible packaging, is between 8 to 10%. So that numbers remain solid. It's only that because of a huge excess capacity in the flexible packaging segment, we nobody across the large players across the industry are able to see a margin correction. And that still eludes the industry. Let's see over the next 2 years how the things pan out. But clearly, no capacity expansion plans in that particular segment. The capacity expansion plans will only happen in those segments which are generating, which are close to a much higher capacity utilization levels, as well as the margin contribution is the high, and that's where the capital allocation should be, and that's what will be our endeavor also.
Right. But tell me, what are the demand trends looking like right now, and the kind of trends that you are seeing from both the FMCG as well as pharma segments?
So, if you talk about short term, yes, there has been pain points in the last 2 quarters, driven largely by the inflationary pressures. And but on a long term basis, while these may play out in the short term, on a long term basis, we know that the demand on an annualized basis over the last few years has done between 8 to 10% growth has been seen in this industry. So overall, I think that growth momentum will become stronger as we see the rise of e-commerce, which requires a much higher quantum of the packaging as compared to the conventional, stores. So I think demand momentum, barring some of the specific periods like we saw higher inflationary pressures, will continue to remain. And India being still an underdeveloped market vis-a-vis when we talk about the consumption of the flexible packaging, I think we upbeat on the sector for the next 5 to 10 years perspective. The developed markets are continue to see also have inflationary pressures as of now, as we are seeing, and the demand there also right now is bit weak. But on an overall basis, they've been delivering anywhere between 3 and 3.5% kind of growth over the years, which when you talk about the absolute number, much higher than when percent in India, because India may be only a fraction of the those developed markets in terms of the consumption for the flexible packaging.
Appreciate your time. Thanks very much, Mr. Bhatia, for joining in and walking us through your capacity,
Thank you.
utilization, demand trends, and segmental growth.